Hey guys, welcome back. I hope you had a really great weekend, and I can't believe this weekend is almost over. So it's time to get to it. And last week was a historic week. SPY did open with a gap down, and we gapped down all the way down to the 1 week 35 EMA. I'll show that in just a little bit. We also filled this gap right here. But what makes last week really historic is VIX. VIX popped to 65. And I'm going to take it over to VIX really quickly and take it over on the monthly time frame. So VIX popped to 65. And this right here is basically since the start of VIX right here, which is 1993, we popped to 65, and the only two other times that has happened was in 2020, and we all know how that played out, and then the other time was 2008. So VIX going up to 65 was absolutely not insignificant. It is a huge deal, and I guarantee you that everyone in every financial market is on high alert. I'm not saying we crash, but that is something that doesn't happen for no reason. So VIX did take it to 65, and that is what makes last week a historic trading week. And we opened with a huge gap down. We actually gapped down a little bit over 3%. Let's measure this out. So yeah, almost 4% we opened, and we got caught right here on the 1 week 35 EMA. And now let's take it to the weekly time frame. You could see how significant the 35 EMA is when it comes to the uptrend in the S&P. So we have been almost completely above the 35 EMA. There have been times right here where we struggled to get back above, but since we made lows in October of 22, and I'm not talking about October lows last year, I'm talking about before that. Once we got back above that and we had that fight, the 35 EMA has been a huge level in the uptrend, just as when we got underneath it, the 35 EMA was a resistance. This is in 2022. And then again, in the COVID era, the 35 EMA, once we dropped, this was one of the other times where VIX spiked to 65, and then we saw this, and that was from top to bottom, a 32% drawdown. So once we got back above the 35 EMA, we found support on it, and we found support on it over and over. So 35 EMA is a really big deal. This is where we opened last week. We dropped down to the 35 EMA, and just so you know, we did close up. So we bounced on the 35 EMA, and this candle is up. And so let's go back to the 30-minute time frame and go over the week. So big gap down to start the week. Then we got above the 35 EMA. Then we got above this dashed line right here, and that is previous support that goes back to May. So we did get back above that after bouncing on the 35 EMA back above here on Tuesday. So Tuesday we gap up. You could see that gap a little bit left over right here. Then we do make a run to get above the 30-minute 35 EMA, and we did get above that. So we got into this down gap and above the 35 EMA, and then we got pushed back out. So on Tuesday, we closed out this up gap right here. That goes back not quite as far as the other one, just before FOMC in June. So we had an island top right here with this down gap and up gap, and then Tuesday we bounced up, got into this down gap, filled the up gap, and got pushed back out. So 35 EMA, we could not get above it on Tuesday. Wednesday we gapped up above the 35 EMA, filled a little bit more of this gap right here, and got pushed back out. We got pushed back out viciously, and we did stay above this up gap from Tuesday. Then Thursday, we gapped up right here, and this dashed line, that was that support I just showed, and we did see that as a support. We gapped up. We got back above the 35 EMA on Thursday, and we closed just a little bit above the 4-hour 200 moving average. And the 4-hour 200 moving average Was also a bit of a resistance here on Wednesday. So Thursday we did get above that. And on Friday, we did make a run to close this down gap from the week. So looking at SPY and also SPX, I'll flip over to in just a second, but from where we closed the previous Friday to where we closed last Friday, completely flat. So now then taking it over to SPX, you could see that same thing over here. Gap down to the 35 EMA. We also filled this gap right here. So those two things got us back above the 35 EMA and above this prior support. And that was actually on Tuesday that we gapped over that support. We made a run into this gap. We filled this gap on Tuesday right here. That was the up gap. That was part of the island top. And as soon as we filled that, we got pushed out of the gap. Wednesday, we gapped up and we filled a little bit more of this down gap from the beginning of the week. And then we got smacked out of that, but we did close right above this up gap from Tuesday and also that prior support level from, I think I said May. And then we gapped up Thursday, got back above the 35 EMA. You could see this blue dotted line right here. That was the 4-hour 200 moving average, which the week before last week was a support. And I definitely wouldn't call it a support. It's just where we saw a technical bounce. But we did bounce there. And then when we came back up, 4-hour 200 moving average was a resistance until the very end of the week. So then Thursday we gapped up, got back above the 35 EMA, closed right at the 4-hour 200 moving average. And then Friday was a run to close out the rest of this down gap that we started the week with. And we ended up closing from where we closed Friday, the week before last Friday, to where we closed Friday, last Friday, completely flat. So a lot of volatility and we went absolutely nowhere week over week. So SPY did close up on Friday, 0.44%. SPX closed up 0.47%. VIX closed down on Friday, 14.38%. So Wednesday, Thursday, Friday, VIX got crushed pretty good. I'll have to take a look and dive into VIX and see just how much. And I definitely wish, since VIX is a measure of 30-day volatility, when VIX spiked to 65, I wish that I did an implied move reading at that time. That would have really be interesting to see what we could expect for the next 30 days, but I didn't do that. So lesson learned for sure. Next time VIX spikes, definitely do a 30-day volatility reading. And then on Friday, we did close within the implied move, both in SPY and SPX. So then let's take it to QQQ. We opened the Nasdaq index with a huge gap down, and let me measure that out really fast. We opened last week with a 5.25% gap down. That does not happen every day, and we gapped underneath the 200-day moving average. We also did have a gap right here, which likely is the reason we did get pulled back up right away. So we did get right back above that 200-day moving average, and we took it up to the weekly 35 EMA. I'll show that later in the video, and we did get pushed back right at that 35 EMA, and we did close Monday down significantly. So not as big as we opened, but we did close Monday down just under 3%. So big down day on Monday. And then on Tuesday, we gapped up. We got back above the weekly 35 EMA, pushed into this gap from the opening of the week, and then we did get above the 35 EMA, and then we got pulled back. Wednesday, we gapped up. We closed this gap. As soon as we closed this gap, we got pushed back. And that may not look like a huge pushback, but it's deceptive. That was a big move from top to bottom on Wednesday. It was 3%. And then Thursday, we gapped up. You could see we did leave about half of that gap open. We got back above the 35 EMA, and then we stayed Thursday and then into Friday above the 35 EMA. And something to note from last week is that selling volume was huge. When we dropped here, we had really big volume. And then right here, when we did see the green days, we did not see buying volume return. You could see right here, volume under the 30-day average. So we went back to low volume very quickly last week. High volume at the beginning of the week with these down moves, and buyer volume, there was no excitement to get back in at these levels. So really low volume here. And then we did close underneath the 4-hour 200 moving average and underneath this gap from last Thursday. This was actually after Amazon earnings and where they guided lower. So that was this gap. We did still close underneath that and the 4-hour 200 moving average. And from the beginning of the week, so where we closed actually the Friday before to where we closed on last Friday was slightly up. So big moves during the week, and ultimately week over week, we really didn't go anywhere. QQQ did close up on Friday, 0.52%. VXM closed down 7.22%. And we did stay within the implied move on Friday. So 200-day moving average, let's just really quickly look at that on the 1-day time frame here. That was our bounce right here. So we opened underneath on the week. We filled this gap from right here, and those two levels did bring us back up. And that was the first time that we got underneath the 200-day moving average since last year, 2023 in March right here. So we were clearly overdue for that pullback. And then IWM. IWM also opened with a gap down. Let's measure out that move. We did close the Friday before right here, and we opened right here. That is a 5.25% move as well. So huge down gap to start the week, and this is really awesome. We had the 1-day 200 moving average right here. We also had the 1-week 200 moving average right here, and that is exactly where we bounced. So this is the 30-minute time frame. This is the 1-year time frame right here. You could see that 200-day moving average is right there. We did bounce right on that, but we also had the 200 moving average on, this is the weekly time frame. So lots of support right at that level, or maybe it was just a technical bounce. With those levels right there, there's almost no way that we're not going to see a technical bounce. So 1-day 200 moving average, 1-week 200 moving average, two huge levels right there to catch us at the bottom of the week and the bottom of that drop on Monday. So from there, we did come back up to the 1-week 35 EMA, and we were just on the 1-week time frame. So later on, I'll go and show that 35 EMA, but this was really cool too. We saw 35 EMA last week was our support. 50-day moving average was our resistance, and we also had the 4-hour 200 moving average cutting right through the middle. It didn't necessarily offer any support or resistance, but it was a significant level. And you can see we did get pushed back here, and then here we did see support on the 4-hour 200 moving average, but it's way more clear that 35 EMA was our support, 50-day moving average was resistance. So after we pushed up, we did get into this gap right here, and this was right after we saw that initial move right here that gave us this big rally. So we saw this big up gap, and we pushed into that on Monday, got pushed back out. Tuesday, we came back up, almost filled it completely, and no, I'm sorry, we did actually fill it on Tuesday. So Tuesday, but as soon as we filled that up gap, we got pushed back out. Wednesday, we gapped up to the 50-day moving average. That is where we're seeing resistance, and we got a really big pushback from there all the way down to the 1-week 35 EMA. That intraday move on Wednesday was massive. It was down almost 3%. And then Thursday, we gapped back up to the 35 EMA, and we didn't quite get back up to the 50-day moving average. It was a weekday. There really was not a lot of volume. We were down about half of the volume of the past 30-day average. So here again, earlier in the week, we saw big volume when it came to the selling. And then once we got over here, volume basically fizzled out, and we were back to the low volume that we have been seeing. IWM closed down on Friday 0.21%, RVX down 9.2%, and we did stay completely within the implied move here. And in IWM, let me bring this in just a little bit closer, we did not close out the gap from the beginning of the week. So SPY, SPX, QQQ, those three did close out the opening gap from the week. Small caps did not, and we did actually leave about $1.50 right here, so above the 50-day moving average here. And on the week, we did see a red candle here. So the other two did print green candles, but IWM had a 1.23% down weekly candle. So that is definitely significant as well. And then taking it over to the Dow Jones. This chart looks a little bit different because we only have weekly contracts in DIA, and last weekend at the start of the week, I did give the implied move for the entire week, which was between 389 and 405, and we did start the week gapping underneath that, and the first day we were completely outside of that implied move. So that red line is actually where the bottom of the implied move is. It's a little bit hard to see, so I did have to put that in there. So that's what that thick red line is. So we opened the week down, so really big move here. Let's measure that one out. That is from the previous Friday to where we opened on Monday, was down 2.67%, and we opened just above the weekly 35 EMA. You could see when we did come all the way down in that first candle with that wick to the penny, that is where we bounced. So Monday we did come back up, and we ended up closing outside of the weekly implied move and outside of the trading range for the day. Tuesday, we did come back up and we closed just within the implied move here. So we got back up to the 35 EMA and we pushed into this gap, and then we got pushed out of that gap. Wednesday, we gapped up. 50-day moving average was right here, and that is exactly where we got rejected. That was a pretty big move on Wednesday. Let's see what that measures out to. So Wednesday, almost 2% move down. And then on Thursday, we did gap up. We still have that gap open right here. We got back above the 35 EMA, above the 4-hour 200 moving average, and we stayed above the 35 EMA for the rest of the week. So Friday, we did kind of coast along that 35 EMA. But here also, we never closed the gap from the opening of the week. So last week in the Dow Jones, we also have a weekly red candle. But what's really cool is you can see that we did close within the implied move for the week. DIA closed up 0.16%, and we did close within the weekly implied move and within the trading range for the day on Friday. So absolutely wild week. Let me know in the comments how you did, and then let's go check out tomorrow's levels. All right, guys, so this week we do have inflation data. We have PPI on Tuesday in pre-market, CPI in pre-market on Wednesday, and it's going to be a make it or break it week. If inflation comes in hotter than expected, that could temporarily stabilize the markets at these levels, but it would also raise concerns of a more aggressive stance with the Fed, and it would increase chances of a recession. And we will see how the market interprets the data. But Tuesday and Wednesday, definitely expect higher volatility than average. And before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to take better trades, choose better strikes, and you love that I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions at all, make sure to leave me a comment. I do get back to every single one of them, and if something I'm saying doesn't make sense, then leave me a comment and I'll try and clarify it either within the comment or within the next video. And I also do have an announcement. Starting this Friday, I'm going to be switching the format of my channel, and I am going to start having membership only videos. So there's still going to be a ton of free content, but then the implied moves for the next days are going to be under membership only videos. So I'm not doing it just to be another greedy YouTuber that just wants as much money as possible. It's because I really want to get out of the real estate business and focus completely on the stock market, these charts, these videos, and this content. So to be able to do that, I do have to charge a membership fee for some of the content that I put out. And that will also make my content more timely. I won't be putting them out in the middle of the night down the road. So for the next few days, everything's going to be the same, but on Friday, only members will have access to the next day's trading ranges. All right, so starting in SPY, tomorrow's implied move is between 527 and 539, and that is from options. The 30-day average volatility is much wider. It is between 521 and 544. And the difference between the two ranges is because we have seen such a VIX crush over the past few days. Wednesday, Thursday, Friday, VIX came down considerably, and it brought down our implied move, and the 30-day average move was about 2% a day. And then for tomorrow, we do have 1% as the implied move. And then on Tuesday's contract, we have a 1.38% implied move between 528 and 541. And to the upside, the first level to look for is going to be the up gap right here. I'll zoom out and show that in just a minute. And this down gap right here, that is the island top. And we saw that gap down. This was last Thursday. Not last Thursday, but the one before that. This was where we had Amazon earnings and the guidance that brought the market down afterwards. So that's the down gap. And the up gap is from, I believe this is CPI and FOMC in June. Yep, right here. That is inflation data in June. And we do have the rest of that up gap right here, and that down gap from Amazon earnings right here. So island tops do tend to be a battle zone. So if we do get up there, definitely be careful, and it could be resistance right away. And if we do get into there, it could be violent. So we also have that 30-minute 200 moving average that is at the top of the implied move right here. And the top of the implied move is 539. The top of the implied move on Tuesday's contract, 541. And we also have the 50-day moving average at the top of our trading range tomorrow, and the 1 hour 200 moving average as well. So the 50-day moving average momentum is still positive, but it is flattening out. Also the 4 hour 200 moving average, it's still positive, but it is also flattening out. So big resistances once we get to the top of the implied move tomorrow. And then underneath us, we do have the 35 EMA. We did chop around that last week. We did on Tuesday get above, get pushed back down. Wednesday, we gapped up, got pushed back down. We finally got back above it on Thursday, and we held above it on Friday as we closed out the gap from the beginning of the week. And we have that just underneath us, and then also that 4 hour 200 moving average. That is a big level on the 4 hour time frame. And then underneath that, 527 is the bottom of the implied move for tomorrow. 525 is the bottom of the implied move on Tuesday's contract. And at the bottom of the trading range for tomorrow, we do have that up gap from Wednesday going into Thursday last week right here. And then we have that Tuesday gap up right here. And this dashed line, if you recall, that was our support back in right here. That was at the very end of May, almost the 1st of June right here. And that is 518. And we did get underneath that with that massive gap down here, but then we did end up seeing that level as support when we did get back up. So 518-ish right there is the bottom of this up gap and also that support level right here. And of course, just a little bit outside of that, we have that 1 week 35 EMA, super huge level. Go take a look at that level on the weekly time frame. It has been defining the uptrend for over a year and a half, and if we break that, that is a big deal. So that is SPY for tomorrow, and taking it over to SPX. The implied move for SPX tomorrow is between 52.95 and 53.95, and that is from options, and that is a 0.9% move implied for tomorrow. The 30-day average volatility is much wider, 2%, and that is between 53.35 to 54.60. And just because options is keeping it in a tight range tomorrow does not mean we can't get to these outer edges, and we have seen big moves lately. So options are predicting within here, but within the 30-day average, definitely possible. And then Tuesday's implied move 52.70 to 54.15, and that is a 1.3% move, and that it does align back to having VIX in the 20s. We are just a little bit above 20 here. And to the upside here, we also do have this up gap and down gap. This is the down gap right after Amazon earnings that took us right before Amazon earnings. We were right at that 50-day moving average, and then we gapped down. And you can see that's right at the top of the implied move here. This gap, I didn't fix it. It's about half full from where that is, but that also is from CPI in June, and that is right here. And then above that, we have the implied move. Top of the implied move is 53.95. Top of the implied move on Tuesday's contract is 54.15. We also do have a little up gap right here, and that goes back to July 25th. And we didn't completely fill that, so we do have an island top right here, and island tops do tend to be a battle zone. So if we get into this level, expect some volatility. And just outside of that, we have the 50-day moving average and the 1 hour 200 moving average. I don't think I mentioned that we do have the 30-minute 200 moving average right at the top of the implied move here, and we are bearish on this time frame. You could see on the 30-minute time frame right here, we saw that cross down, and since then the 30-minute 200 moving average has been resistance. So then we swung down here, and when we came back up, 30-minute 200 moving average resistance. Now we dropped away, and now when we come back up, that could be resistance if we stay in a downtrend. So watch for that level. 30-minute 200 moving average is at the top of the implied move right here. And then to the downside, we have the 4 hour 200 moving average right here. 35 EMA is just underneath us, and we did Thursday and Friday see that as support. Let me change the color there. We are red and dotted for this one. And okay, 35 EMA is right here underneath us. We did, after that big drop, we came back up to the 35 EMA, and initially we got rejected. Here it was at the 4 hour 200 moving average, and we got pushed back under the 35 EMA. Then here we gapped up, filled a little bit more of this gap, got pushed out underneath the 35 EMA. Thursday and Friday we did get above, and we slowly moved along that into the end of the week as we filled the gap from earlier in the week, the opening gap. So 35 EMA is just underneath us, and then the bottom of the implied move is 52.95. 52.70 is the bottom of the implied move on Tuesday's contract. Then at the bottom of our trading range for tomorrow, we do have this up gap from Wednesday going into Thursday. And then we also have this little gap right here from last Tuesday's up gap, and this support from last, I think it was May 31st, early June. Let me just go ahead and zoom out and see. That is right here, May 31st, support right here. We bounced, and that was also a bounce on the 30-minute 200 moving average. And actually that's the 1 hour 200 moving average right here. So that support level is just outside of our trading range for tomorrow. quite a bit outside of that actually. It's just outside of this gap. So that is, let me take it back to the 30-minute where it has all our numbers and everything. So this is SPX for tomorrow. And then taking it over to QQQ, the implied move over here is between 444 and 458, and that is from options, and you could see that is considerably smaller than what we've been seeing in the past 30 days, which is 434 to 467. And options are extremely smart, but when volatility strikes, it is very good to know the 30-day average volatility. So that is for tomorrow's contract, and then Tuesday 441 to 460, and to the upside we do have the first level to look for is going to be this down gap. This is again from Amazon earnings last Thursday going into Friday. We had a pretty decent gap down overnight, and then that also has the 4-hour 200 moving average right there. 30-minute 200 moving average is coming down from above, and we are bearish on this time frame. And you could see since we crossed down, we haven't even really come too close to it, and we've got rejected. So right here we got pushed back down, then we took another swing up, got pushed back before it. So here we're getting pretty close, so be mindful that we could see resistance here. And this 35 EMA is still underneath the 30-minute 200 moving average, so we are still bearish on this time frame. And above the 30-minute 200 moving average, and really right where it crosses the top of the implied move here, is 458. That is the top of the implied move. Top of this gap from last Thursday is right around Tuesday's top of the implied move at 460. And outside of our trading range for tomorrow, we do have that 1-hour 200 moving average. The momentum there is down. We also have the 50-day moving average, and the momentum there is still pointing up, which could give us a little bit of a lift, but it has flattened out tremendously. So for right now, I don't think we're going to be flying high above the 50-day moving average. And then to the downside, we do have that 35 EMA right here. And then we also have the weekly 35 EMA, which we did close above last week. That is a very important level. I'll zoom out to that time frame in just a minute. And then the bottom of the implied move is at 444. 441 is the bottom of the implied move on Tuesday's contract. And even for day trading lately, I have been leaning into the next day's strike to be a little bit safer because of volatility. And then just at the bottom of the trading range for tomorrow, to the bottom of the 30-day average volatility, we have this up gap. This is from Wednesday going into Thursday, and the 200-day moving average is just underneath us. Momentum here is still pointing up. So really quickly, let's take a look at the weekly time frame and that 35 EMA, and it is right here. Let me zoom in, and we did close above it. So that gap down, we did take it underneath the 35 EMA, then we traded back up. But if I zoom out, you could see how critical that level is, especially in QQQ, in defining the uptrend. So every time we've seen that since, this is the bottom in 2022, and all of 2023 and 2024, we have been trading above that level. And each time we came to it, it's been support. So up, down, support, up, down, support. If we break this level, that is huge. The last time we broke it and printed a red candle, this is what happened. And that 35 EMA ended up being resistance. So resistance here, here, and here, and not until we got back above the 35 EMA did we see that uptrend again. So 35 EMA is no joke on the weekly time frame. So let's go back to the 30-minute time frame, make sure I didn't miss anything. Looks good here. Let's take it over to IWM. The implied move for IWM tomorrow is between 203 and 210, and that is from options. And the 30-day average volatility is quite a bit wider. We have seen a lot of volatility in IWM, and it is between 199 and 213. So the implied move from options is 1.5% in either direction, and the 30-day average is 3%. So twice as wide is what the 30-day average is showing. And let me just get zoomed in just a little bit more here. There's a lot going on in this trading range. And then the implied move on Tuesday's contract is between 202 and 211. And again, just because volatility has been so high lately, I have been leaning into the next day implied move strikes. I just feel a little bit safer out there, even on the day. And then to the upside, we do have the 50-day moving average is right here, and it is within this gap that we didn't fill. So the bottom of the gap is at 208, top of the gap is at 209, top of the implied move is at 210, and that 50-day moving average, clear resistance right here, is right in the middle of that gap. And then above that, we have 211. If you recall, 211 is a huge level. It is a very long support resistance, and I'm taking this to the weekly time frame. This is the 5-year chart, and 211 is this green line right here. During the COVID era, after that rally, we consolidated there, and then once we broke underneath it, it became resistance. So support, 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 and then resistance here, resistance here. We did pop above it, and we are currently underneath that 211. 211 is right here. That is that dashed line. It's the top of the implied move on Tuesday's contract. And above the trading range, we have a crazy looking island top, which is this down gap and the 2 up gaps from the rally we just had above 211. So this is going to be a crazy battle zone. If we get above this island top, then this gap, I still have it as a red here, but it was closed out. We have no more resistance. So the bears are all right here, ready to bring this down. This does not look like a joke to me at all. So that is the upside of IWM. And to the downside, we have the 4-hour 200 moving average. And underneath that, we have the bottom of the implied move at 203, the 1-week 35 EMA, which I just showed how important that level can be, is right at the bottom of this gap. This is the gap from last Wednesday going into Thursday, and then after that we got above the 30-minute 35 EMA. But this gap right here has the 1-week 35 EMA. If we break that, we are in trouble. And we did see that level as support here and support here, so consider it a support unless we break it. And then just underneath that, we have the bottom of the implied move on Tuesday's contract, just outside of tomorrow's trading range, and this is huge. We have that 1-day 200 moving average and the 1-week 200 moving average, and they literally crossed right here, and that is exactly where we bounced when we dropped down. That was a huge catch by some huge moving averages, and those are right here outside of our trading ranges for the next 2 days. So that is definitely an intense trading range. And then Dow Jones, DIA, the implied move over here for the week is between 387 and 403. And this chart's a little bit different. We have the implied move for the week because we only have weekly contracts in DIA. We don't have dailies like the others. So we start off with that over the weekend, and then the 30-day average volatility is the trading range on the next day. So for tomorrow, to the upside, we do have the rest of this gap that did not fill last week. So we started the week with that massive gap down. That previous Friday's close was right here, and we didn't close that gap out. So we have that as the first level of business, our first resistance. The bottom of that gap is at 496.5. Top of that gap is at 397.25. Did I say 496? It's 396.5 right here. And then 397.25 is the top. So it's not a huge gap, but it's definitely going to be resistance. And then above that, 30-minute 200 moving average and the 1-hour 200 moving average. This is really important right here because this 30-minute 200 moving average, if it crosses underneath the 1-hour time frame, that is a bearish signal. And at the top of the trading range for tomorrow, which is 401, we do have this up gap and this down gap. So we do have another island top, and that goes back to that Thursday with Amazon earnings where we gap down afterwards, and then this up gap, which I honestly have no idea. That's okay. It goes back just a little bit here to July 25th, and we gapped up. Don't know why, but we did, and we left some of that gap open, and that is part of the island top that is at the top of our trading range. And then to the downside, 35 EMA is right underneath us, and this is the same as in all the other charts. We did get back above that. We had a hard time staying above it at first. Tuesday we got into this gap, pushed back down underneath this 35 EMA. Wednesday we gapped up back into that gap and got pushed back down underneath the 35 EMA. But then Thursday and Friday we did get back above, and we did close the week above that 35 EMA. So that is just underneath us. Always know where your 35 EMA is. For tomorrow it's just underneath us. We have the 50-day moving average. The 50-day moving average is completely flat in the Dow. So momentum is flat on that time frame. This moving average, the 50-day moving average right here, was a resistance on Wednesday, and resistance right here Thursday, Friday, and as soon as we got above it, we got pushed back down. So 50-day moving average definitely needs to be on your chart. Underneath that 4-hour 200 moving average, momentum here is up, but it is very slightly up and really flattening out. And the reason we consolidate a lot of times around big moving averages is because we're waiting for the momentum to shift completely. So if we can't get this moving average to turn up again, if we don't see some up days, then we're going to get pulled back down underneath this 4-hour 200 moving average. Bottom of the 30-day average volatility, 389 for tomorrow, and then we have that up gap from Wednesday going into Thursday at the bottom of the implied move for the week. And underneath all of that, weekly 35 EMA. Critical level to hold if we are going to resume an upward trend here. For now, it's holding us up, and for now to the penny, that is where we dropped down and bounced last Monday. But that too is also getting pretty flat. We're losing momentum, and we're losing momentum fast on the bigger time frames. So that is DIA. Let me know what you guys think. Let me know what you think we'll see for CPI and PPI, and let me know if I missed anything. And other than that, have fun, trade safe, make sure you take profits when you're up, and I'll see you guys tomorrow night.